BlackRock out with its quarterly report just in the last hour. The company beat estimates both on the top and the bottom lines by a lot. Joining us right now in an exclusive interview to break down the numbers and talk about much more is Larry Fink. He's the CEO of BlackRock, which is the world's largest asset manager with now over $9.5 trillion in assets under management. And Larry, good to see you this morning. Thanks for being here.
Hi, Becky, and hi, guys.
So looking through your numbers, it looked incredibly strong on just about every metric. You had $81 billion of total net inflows for the quarter. You had strong numbers. You got strong organic growth, high performance fees, 14% growth in technology revenue services, a 13% increase in revenue. And yet the stock's a little weaker this morning, which just tells me, look, there are very high expectations for every company as we head into earnings season. And we've really bid up a lot of these stocks the whole way through. Is that your take on it?
Well, our quarter was very broad-based. I think the differential between us and I think our competitors and the rest of the world has been, as you said, we had $81 billion net flows. One of the key metrics was we had 10% organic base fee growth. You mentioned about the 14% technology growth, but one of the key metrics for us was we had $63 billion of active inflows in actively managed products, which now totals over $120 billion of active managed products in terms of inflows. And I think this just represents that our voice is even louder, even more important to our clients worldwide. We're winning more share of wallet, and importantly, we continue to be investing in our future. Hidden in those expenses we are investing in our future as much as we've ever done in the history, and yet and the purpose is to stay in front of the needs of our clients and anticipating those needs. And I believe now this quarter again exemplifies how we've been able to position ourselves and move forward and continue to try to anticipate what our clients are looking for, what their needs are, and having a voice, I would say a reasonable voice about long-termism and try to move away from the tick-tock of the ups and downs of the markets. And so related to our stock price today or any other day, I can't predict where our stock is going to be. All I'm focusing on is the performance of what we're doing for our shareholders, but importantly, trying to making sure that we stay focused on all our stakeholders.
But when you mention the tick-tocks of the ups and downs of the market, there haven't been too many downs lately. We just ran through a spate of like 10 record highs set for the major averages out of 12 sessions, which is the first time that's happened since all the way back to like the 1960s or something. I mean, we've gotten used to a market that keeps climbing up, and you're somebody who knows the markets really well. What do you think about that, Larry? What concerns you, or what makes you think that this trend will continue?
The amount of cash on the sidelines has never been greater. The amount of monetary stimulus has never been greater. The amount of fiscal stimulus has never been greater. And I was in Europe last week. I was traveling around the world 2 weeks ago. There's no question from my conversations with clients, their bigger concern is how to put their money to work, where should they put it, and how should they think about it. Specifically in Europe, Europe has been a laggard. Europe has been always slow in response. But Europe this time around versus 2008 and 2009, aggressive monetary policy, very aggressive fiscal stimulus, great deals of cash on the sidelines. And I do believe we're going to see the world rebounding economically. I was in Italy. Italy had a 9% decline in GDP in 2020. It'll take them 18 months to get back to where they were, but they're in a great trajectory. France is going to rebound the entire GDP loss of 2020 and 2021. So we're seeing different metrics. Now, there are things that I worry about. I worry about inflation. I do not believe inflation is going to be transitory, that it's going to be more systematic over time. And how the Federal Reserve and how other central banks navigate that is going to be very important. I am worried about the Delta variant and can that slow down parts of Asia. We are seeing a real disconnect between the countries that have been very vaccinated and moving forward on vaccination and the countries that have been late in vaccination, but focusing more on isolation. Isolation worked before we had a vaccination. And now, with a vaccination, these countries that were late on the vaccination are going down in isolation again. And so we are going to see this unevenness in the world today. And so I'm not trying to suggest that it's going to be a straight line upward. And there could be disappointments going forward. But overall, with the amount of fiscal stimulus and monetary stimulus, and more importantly, with the amount of cash that is looking to be put to work, and I believe the trend line is still going to be upward. Maybe not as fast. Maybe it's going to be very moderate for the next 6 months as we digest how the world is able to handle the Delta variant and the speed in which vaccinations occur throughout the world. And then two, what is going to be inflation out 6 months and a year?
Shepard Smith here. Thanks for watching CNBC on YouTube.